Hello, and thank you for listening to our Money Matters. I hope the information I'll share with you will help you understand women in business and finance and ways you might use this information to feel more empowered to take control of your financial future. My name is Cindy White. I'm the Regional Wealth Sales and Service Manager with First Citizens Bank. I'll stop for just a few seconds to allow you to read our disclosure. I found this quote from Warren Buffett outlined in a CNBC article intriguing. It outlines the significant role women play in the workforce. Buffett recalls how far women have advanced since half a century ago, when women were discouraged from entering the workforce and encouraged that marriage was their only livelihood. Wow, we've come a long way, and yet we still have some room to grow. Proper planning will help us continue to excel. Let's start with a few facts that can have long-term effects to women's overall financial health. I think this will help us understand how we can be in tune to these factors long-term in our decision-making process when it comes to our careers. Life expectancy is the first. Women are living longer than ever before, and funding the longevity will play into our overall financial future. Gender and pay gap, time in the workforce, and workforce roles. Men and women hold disproportionate percentages in different roles and sectors in the workplace, among occupational distribution to leadership roles. Let's take a look at a few statistics on the first three. Women live longer than men on average. The current overall life expectancy for U.S. men is 76 years old, whereas women's overall life expectancy is 81 and almost 86 years old for women at age 65. Longevity has been increasing over the years thanks to medical advances and lifestyle improvements. And recent studies show that although women live longer than men, they do spend the latter years being faced with health challenges. We have some planning to do, ladies. In a 2017 report by the Department of Labor, women's median earnings were 80.5% of those of male full-time wage and salary workers. Gender pay gaps can also differ by age, race and ethnicity, and education attainment. Another factor that can play a huge role in the overall long-term financial health for women is time in the workforce. Men are more likely than women to work more than 40 hours a week at 25% versus 14%, where women are twice as likely to work part-time at 24% versus 12%. Working fewer hours leads to earning less, but can also mean missing out on things like 401k contributions, vesting in retirement assets, and even full-time employment benefits in general. These are important factors we need to plan for in our life phases. We'll explore those in just a second. When it comes to money, women are more than about the bottom line. Yes, we care about performance, but we see money as a way to finance the life we want to live, to meet our commitments and the people and issues we care the most about. First and foremost, when it comes to money, family is our top priority. 77% of women say they see money in terms of what it can do for their families, and 65% of women say they want to invest in causes that matter to them. Bottom line, women typically link their finances to their values, goals, and priorities. Let's take a look at the key life phases of women, and most importantly, some financial planning tips we want to be sure we address during each of these phases. Unfortunately, we are more likely to have specific financial setbacks in one of these key areas. First is our early adulthood phase. We are beginning to establish and maintain early independence. We've now graduated from college and graduate school in higher numbers than men, boosting our career options. Today, 42% of women ages 16 to 64 have a bachelor's degree or higher compared to 25% in 1992. This is a crucial time of a woman's formative financial life. This is where we can begin to build our foundational financial wellness, which can mean a higher success rate of financial independence later in life. One of the consequences of the increased education, though, is that women hold 65% of all student debt. Here are a few financial tips to help in this phase. Build a good foundational financial plan. Create and stick to a budget. Understand the inflows and outflows of your finances. Start to fund an emergency fund. This is critical as you begin your financial life. A good rule of thumb is to build it up to 6 months of living expenses. I can't stress to you enough that this is a key component in your overall financial planning. Know how the use of credit can affect you long term. The impact of a positive credit score can affect many other phases of your life. Work with a professional to understand the difference between good credit, things like mortgage or student loans, versus bad credit, things like repeated high credit card debt, and how credit plays into your overall financial health. If you have debt, and you probably do, you've just graduated from college most likely, it's okay, but create a plan to reduce that debt. Stay true to your plan. The long-term impact of beginning a savings plan is a key planning component. It may feel unmanageable, but begin small through your budget and build it up. And very, very important, understand what types of retirement options your company offers. Things like 401ks, 403bs, health savings plans. Take advantage of them. You may be leaving money on the table. If your company doesn't offer any type of retirement plans, seek out an advisor early to start a retirement savings plan. 63% of women ages 18 to 29 say financial planning is too difficult to think about. Yet, 84% anticipate they will be more responsible for paying their own retirement than their parents' generation. Next, let's take a look at the parenting phase. 80% of women have children during their lifetime, and on average, they have 2 children. Parenting is emotionally rewarding and fulfilling, but it can pose challenges for career trajectories and finances. We are more likely to make trade-offs for family than men are. Let's face it, it costs money to raise kids. Many working women are squeezed between raising kids and taking care of elderly parents. The majority of primary caregivers in the U.S. is 66% are women. Here are a few things to think about during this phase. Know that you may have career interruptions. Plan early for those possible interruptions. Address potential pay gaps. Create more extensive budgeting when addressing your future goals. It's never too early to begin a savings plan. The sooner you start, the easier it is to make up for the lost time in the workforce. Plan ahead for children's education. Look at the anticipated cost of education. Explore a manageable savings plan early. Know what vehicles are available for education, things like a tax-efficient 529 plan. Become the family financial role model. Work with an attorney to create the basic estate tools, like a will, power of attorney. You want to make sure you decide who has custody of your children, not the state. Equally important is the power of attorney and healthcare power of attorney. You choose who will make those important financial decisions for you. Women spend 15% of their working years outside of the workforce caring for children and elderly parents compared to the average man's at 1.6%. Next, let's explore the elder caregiving phase. 2/3 of care provided for elder adults is done by women, whether it's for a parent, grandparent, parent-in-law, other family member, or even a friend. Like in parenting, it requires attention, trade-offs, and emotional commitment. Caregiving can lead to lost benefits, promotions at work, and even work interruptions, along with out-of-pocket expenses. The average caregiver spends $7,000 per year on their own care recipients. Here are some things to consider. Talk openly with your family now about your wishes for later in life. I've seen too often in my career clients who were reluctant to have those conversations, which leaves the children or caregivers wondering how they will be able to manage and if they are providing the right care in a very difficult time. Understand yourself and your loved ones. You may be caring for Medicare and long-term care options. Things like housing and hands-on care as the needs of loved ones can change over time and many times quickly. Understand from your financial plan how this could affect you personally. Could you fund a long-term care need? Again, make sure you have the basics on estate planning done. As well, help your loved ones know where to access your legal authorization documents, power of attorney, healthcare power of attorney. This will enable your family to fulfill the financial and healthcare tasks when appropriate. Ask and seek out help and guidance. Caregivers overwhelmingly report that it gives them a sense of purpose and that they are grateful for the opportunity to provide care, but it can also be stressful and financially challenging. Let's now review the retirement phase. Women face a retirement paradox. We live longer on average and may have a much longer retirement, but there could be a major setback if we retire too early and have not invested enough for retirement. Two additional important components to plan for are we enter the retirement phase 2 years earlier than men with less savings, and on average, we will have 39% higher health costs than the average man, paying an additional $194,000 in health care costs. That's 39% more. Adding more complexity, we are more likely to have multiple chronic conditions. Some things we need to think about for planning. Make sure you have a secure financial plan in place before retiring. Review all scenarios that could come into play in retirement. Ensure financial plans account for longer life expectancy and higher health care costs. Develop a Social Security and retirement savings strategy. Understand where and when you'll be pulling income from in retirement. Again, have a good estate plan in place. Make sure you've reviewed it and make updates to it. Ensure you have a power of attorney and health care proxy. Women over 65 have 2 times the estimated lifetime risk of developing Alzheimer's compared to men. The last phase we'll review is spousal caregiving. Women often become caregivers to their own spouses, partners as they age together. Since women marry spouses and partners on average 2 years older, and they live on average 5 years longer. Women who provide this care feel the love and honor of caring for their mate, but they also have a sense to protect their dignity. Providing this care can have significant financial consequences. It can deplete their nest egg, may need to leave the workforce earlier than planned, and there is a physical and emotional toll on caregivers. Some additional things you want to consider. Seek guidance from peers, care specialists, and financial and legal professionals. Understand and know, along with your counsel and family members, where important financial and health care documents are located and how to implement them. Understand and plan to have adequate savings to fund your current and future personal health care needs. Proper planning in earlier phases can dramatically affect this phase of a woman's life and provide security during a very difficult time. As we've moved through these different phases of a woman's life, it's so important to have that financial advocate and role model to look to for guidance along the way. I'll leave you with this. The most difficult thing is the decision to act. The rest is merely tenacity. Thank you for your time today. I hope that I've shared something with you that you'll be able to take back to your clients and make a difference in their lives. Thank you.